Management accounting gives us analysis of the performance of business and are ideally prepared on a timely basis so that we get the up-to-date information to management. Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, welcome to the online class of Universitas Teknokrat Indonesia. With me, Fedi Ameraldo, for the subject of environmental accounting. For these sessions, we specifically will discuss the topic about environmental management accounting. For the content of the sessions is actually divided into 4 categories. The first, we're going to talk about the importance of environmental costs. The second, we're going to talk about definitions of environmental costs. And the third one, we're going to discuss about how to identify the environmental costs. And last but not least, we're going to talk about accounting for environmental costs. For the learning outcomes of these sessions, we are expected that our students first be able to understand why managing environmental costs is important. And the second, we expect that students are be able to define the environmental costs. And the third one, students are expected to be able to identify the environmental costs. And last but not least, students are expected to be able to understand the accounting for environmental costs. Now, defining environmental management accounting. Before we go to what is actually definition for environmental management accounting, we should go to the root of environmental management accounting, which is environmental accounting. So what is environmental accounting? Environmental accounting is a broader term that encompasses the provisions of environment-related information, both externally and internally. It focused on report required for shareholders and other stakeholders as well as information for management. On the other hand, environmental management accounting is a subset or a part of environmental accounting. Environmental management accounting focuses on information required for decisions making within the organizations. Although much the information generated could also be used for the external reporting. I guess many of you still might not be entirely clear on what environmental management accounting actually is. You will not be alone. There's no single textbook definition for it. The easiest way to approach it in the first place is to revisit what management accounting is. And I also that we already learned about management accounting in the previous masters, and management accounting gives us analysis of the performance of business and are ideally prepared on a timely basis so that we get the up-to-date information to management. They break down each of our different business segments in a high level of details. This information is then used to assess how the business historic performance has been, how the business historic performance moving forward, and how the business historic performance can be improved in the near future. Similarly, environmental management accounting is simply a specialized part of the management accounting that focus on the things such as the cost of energy and water and disposal of the waste. It is important to note at this point, the focus of environmental management accounting is not all on purely financial cost. It includes considerations of matters such as the cost versus benefit of, for example, buying from suppliers who are more environmentally aware, or the effect on the public image of the company from failure to comply with environmental regulations. I will give the example, the illustration, how the environmental management accounting applied. So I assume that all of you already know about the ABC or activity-based costings. Now I give illustrations in gymnastics or the fitness centers. I think most of you already know what is the fitness center, right? Now the ABC or the activity-based costings is for the towels that all of us who visit the gym or fitness will be given a towel. And for activity-based costing, we try to count what the possibility washing frequency for the towels, and we're going to talk about the energy use also to the power the washing machines as environmental cost. And the cost driver is the washing. Now, from these illustrations, we could analyze, for example, once the costs have been identified and the information accumulated on how many customers using the gym, it might actually be that some customers are using more than one towel, right? On this single visit to the gym. So the gym could drive forward, change it by informing the customers that they need to pay for a second towel if they need one. For this approach is actually will be seen as environmentally friendly. It is because since less power and less cotton are being used, cotton is refers to the towel, and the source resource of our planet are therefore being conserved. So that's why they call it as environmentally friendly. And last, the gym is also seen as environmentally friendly organizations, and which in turn may attract more customers to increase the revenue. So doing the environmental business, or we could counting the environmental management accounting could help us to identify the potential costs that may appear in the future. And it is necessary to consider a couple of the most widely accepted definitions by the profession organizations. I take the definitions by the M.Ak, the International Federation of Accountants, in 1998. The management of environmental and economic performance through development and implementations of appropriate environment-related accounting system and the practice. It is how the M.Ak defined the environmental management accounting. Then in 2001, the United Nations Division for Sustainable Development, or UNDSD, emphasized their belief that environmental management accounting system generate information for internal decision making rather than external decision making. So environmental management accounting is to be the identifications, collections, analysis, and the use of two types of information for internal decision making. First, the physical information on the use of energy, water, and the materials, including waste. And the second one, the monetary information on environmental related costs, such as earning and saving. To summarize, the environmental management accounting is internally, not externally focused. Therefore, focus on information for internal decision making only. It should not be concerned with how environmental information is reported to the stakeholders, although it could include considerations of how such information could be reported internally. Now we should know what is the categories of costs, and the follow is what the four categories for the cost. The first, environmental prevention cost. The cost of activities undertaken to prevent the productions of waste. And the second one, there is environmental detection cost, or costs incurred to ensure that the organization complies with regulations and voluntary standards. And the third one, there is environmental internal value cost, or costs incurred from performing activities that have produced contaminating and waste that have not been discharged into the environment. And last, there is environmental external value cost, or costs incurred on activities performed after discharging waste into the environment. Now we talk about the managing environmental costs. It is important for us to know why is it important to manage. Actually, there are three main reasons why the management of the environmental cost is becoming increasingly important in organizations. The first, society as a whole has become more environmentally aware, where people becoming increasingly aware about the carbon footprints and also the recycling taking place now in many countries. Companies right now are finding that they can increase their appeal to the customer by portraying themselves as environmental responsible. Second, environmental costs are becoming huge for some companies, particularly those operating in highly industrialized sectors such as oil productions. In some cases, this cost can amount to more than 20% of operating costs. Such significant costs need to be managed. Third, regulations is increasing worldwide at a rapid pace, with the penalties for non-compliance also increasing accordingly. For example, in the large ever seizure related to an environmental confections in the UK, a plane hire firms, John's Cransford Plane Hire Ltd. This company had to not only pay £85,000 in costs and fines, but also got 1.2 million pounds of its assets being seized. This was because it had illegally buried waste and also breached its waste and pollution permits. And it's not just the companies that need to worry. Officers of the company and even junior employees could find themselves facing criminal prosecutions for knowingly breaching environmental regulations. Now we go to defining environmental cause. Many organizations vary in their definitions of environmental cause. The definitions of environmental cause depend on how an organization intended on using the information. They made a distinction between two types of cause. The first is cause incurred to protect the environment, for example, measures taken to prevent pollution. And the second one, cause of wasted materials, capital and labor, for example, the inefficiency in the production process. Now, for identifying environmental cause. In order to identify the environmental cause, it is important to allocate environmental cause to the process or to the products. Only by doing this, an organization can make well-informed business decisions. For example, a pharmaceutical company may be deciding whether to continue with the production of one of its drugs. In order to incorporate environmental aspect into its decisions, it needs to know exactly how many products are input into the process compared to its output, how much waste is created during the process, how much labor and fuel is used in making the drugs, how much packaging the drug used, and what percentage of that is recyclables, and etc. Only by identifying these costs and allocating them to the product can be informed decisions be made about the environmental effects of continued productions. Now we go to the accounting for environmental costs. Actually, there are four management accounting techniques for the identifications and allocations of environmental costs. The first is input and output analysis. Second, flow cost accounting. Third, activity-based costing, and last, life cycle costing. Now we discuss one by one. Input or output analysis. This technique records material inflows and balance it with outflow on the basis that what comes in must go out. So, if there is 100 kilograms of material have been bought and only 80 kilograms of the material have been produced, for example, let's say 20 kilograms difference, so must be accounted for in some way. It may be, for example, that 10% of it has been sold as scrap and another 90% of it is waste. So the accounting for output in this way, both physical and quantity and also the monetary, at the end process, the business are focused to environmental costs. They need to manage another 90% because if they waste or bump it into the open space, it could be some consequences. And this for the flow cost accounting. This technique uses not only material flows but also the organizational structures. It makes material flows transparent by looking at the physical quantity involved, their cost and their value. It divides the material flow into three categories: material, system, and delivery, and also disposals. The values and the cost of each of these three flows are then calculated. The aim of the flow cost accounting is to reduce the quantity of materials, which as well as having a positive effect on the environment, should have a positive effect on a business total cost in the long run. And the next, for the activity-based costing or ABC, ABC allocates internal costs to cost center and also cost drivers on the basis of the activities that give rise to the cost. In an environmental accounting context, It distinguishes between environmental related costs, which can be attributed to the joint cost centers, and environmental driven costs, which tend to be hidden on general overheads. And last, we talk about life cycle costings. Within the context of environmental accounting, life cycle costing is a technique which requires the full environmental consequences, and therefore costs arising from the productions of the product to be taken account across its whole life cycles, literally from cradle to grave. And I try to summarize what we just learned for these sessions. I hope you now have a clearer idea about what exactly environmental management accounting is and why it is important. So that is all from me, and thank you very much. Don't forget to subscribe to the YouTube channel Kuliah Teknokrat. See you next.
Terima kasih sudah menyaksikan video pembelajaran ini. Jangan lupa like, komen, dan subscribe, serta nyalakan tanda loncengnya agar kalian tidak ketinggalan informasi update lainnya. I hate body.